where do you see the future of alternative assets like gold and crypto in the next 5 to 10 years?
So let me take that real quick, and then you can let me know if you agree, or if it's different on the crypto end. Um, Listen, here's where I see physical gold and silver going. I mean, when you look at the history of gold and silver, it's overseen the rise and fall of thousands of empires, thousands of different forms of currency, from barter and exchange to I mean, to actually being on the gold standard here. So it's always had a seat at the table, regardless of what the currency system is. And that's why I call it that eternal measuring stick of value. And so moving forward, it will always have a seat at the table. Whatever comes next, it will certainly be represented as far as, what an ounce of gold is in relation to it. Now, where do I see the asset going as far as performance? Well, let's look at the three factors that drive physical precious metals. One is the strength of the currency, the country you're in this case, the dollar. Second is the volatility of the equity market. And then the third is geopolitical uncertainty. All right. So if the dollar goes weaker, then gold tends to increase substantially, because it just takes more of those weaker dollars to buy that very same ounce of gold. Now, if the equity market is behaving very volatilely or is correcting, then people are going to run to safe havens. So you're going to see an increase generally, or historically, that's what you've seen in physical metals when you have uncertainty in the market. And then, of course, geopolitical uncertainty, or I call this world craziness. Anything that occurs, China invades Taiwan, or North Korea launches a missile test, or Trump says something domestically here, you're always going to see a bump up in metals, because again, metals is that one consistent thing that you can hang your hat on, that's going to be there with the cockroaches, and the nuclear holocaust. So, I mean, and I hate to be, a fear monger like that, or, paint such a bleak picture, but you know what I'm saying. So when you look at those three drivers and you look at the future, if you feel that the world is going to start holding hands and singing Kumbaya, then don't buy gold, because ultimately that means it's going to be a very certain world. If you feel that this equity market that's been driven by, in my opinion, financial engineering and quantitative easing for the last 15 years is going to continue to just, rocket ship up, then don't buy gold. And if you think that the dollar is going to buy more in the next 3 to 5 years, then again, don't buy gold. But if you think the opposite, then the future is very, very bright for gold. And that's why you've seen the performance of gold, just behave so dynamically since the start of this year, and really actually, even in the end of last year. And that's why I believe you're going to see that performance amplify, as we move forward, and as the dollar gets weaker, as the market gets more volatile, and of course, as the world gets even crazier.